Gita, thank you so much for being here. As we look at the so-called K-shaped recovery coming out of this, something I'm interested to see is the trajectory of vaccine deployment in the developed versus developing world, because it seems as though early reports indicate that the developing world is not going to get it as quickly. Is that just going to make the K-shaped recovery worse? And then what are the longer term knock-on effects from that?
Indeed, it is a major concern. What we are seeing in terms of access to vaccines, in terms of advanced purchase commitments, it's coming to advanced economies quicker than it's coming to emerging markets as a whole. Now, of course, some emerging markets do have access to the vaccines sooner than others do. But in terms of the timeline, as of now, the expectation is that most advanced economies will, somewhere in the summer of this year, get to widespread coverage. But if you're looking at emerging and developing countries, especially low-income countries as a whole, we're looking well into 2022. And the COVAX facility that was supposed to be providing these kinds of vaccines to low-income countries is still underfunded. And so this is a major challenge, which, again, as we're seeing from around the world, there are new variants of the virus, coming up. And so if we don't control the virus in any part of the world, I think every part of the world is susceptible to this pandemic for much longer. So it's not just the K-shape, but it's even important for the advanced economies themselves to ensure that there's widespread availability of the vaccine.
Gita, it's Brian Chung here. It's great to speak with you again. Now, I just want to ask about whether or not that changes the baseline projection from the International Monetary Fund. The last projection that you had back in October had 5.2% global GDP in 2021, specifically 3.1% here in the US. That was actually a slight revision down from the earlier update that you had in June. I understand the IMF is cooking the next round of updates on that. But again, there's that new strain, that B117 in the UK, but then you also have the vaccine development. So do you expect to upgrade or downgrade those revisions in the next update that we should expect in the coming weeks?
So yes, we are putting out our next update on January 26th, so very soon. There are a couple of things going into it, Brian. Firstly, in 2020, the Q3 GDP numbers, I think uniformly actually came in stronger than we had expected. So that pushes the global economy as a whole to a better starting point in 2021. Now, the end of 2020 and what we're seeing right now, of course, is a pretty dark winter. So that's having hit. It's not globally the case, but you're certainly seeing that in Europe. I mean, the UK is being hit very hard. You have lockdowns being announced, and that we know has a direct effect on these measures of activity. So, it's right now, the way I see it in the near term, it's a race between the virus and the vaccines. But given what we saw in 2020, that when you had reopenings, you had a pretty strong comeback, plus the stimulus that's in the system, including what was announced by the US and Japan towards the end of the year. That combination, should power a recovery in the second half. So in terms of the overall, direction of it, I mean, again, based on the 2020 to better than expected numbers, we should see an upgrade in some parts of the world.
So then what is the policy prescription for monetary policymakers, the central banks of the world? I mean, arguably, they were very important in making sure there wasn't a financial crisis that emerged from all of this, at least in 2020. But for 2021, at least here in the United States, the story is about quantitative easing for the Fed. Should they taper or increase their asset purchases? People are wondering, what is that going to do with regards to the trajectory of the virus, which is still primarily an epidemiological phenomenon? So what is the recommendation for global central banks as we begin 2021 as to how to engineer that recovery?
I mean, given the high level of uncertainty at this point, and the fact that we still have the pandemic and we have these new virus mutations, given all of that, of course, central banks should take a pretty cautious approach to withdrawing any kind of support measures. In addition, the vast majority of advanced economies have their inflation below target. And especially if you look at, for instance, the euro area, and if you look at what's happening in terms of inflation expectations, the risk of that drifting away further from their target is quite serious. So the strategy should be one of of a cautious approach. We're still in the midst of this pandemic, and as things recover, of course, one reassesses. But given what we're seeing in terms of inflation levels around the world, in terms of inflation expectations, I'd expect it to be a pretty gradual process of any kind of, in terms of policy moves.
Gita, it's Miles Udland here. I wanted to ask more broadly maybe about what the IMF and the broader economics community may have learned out of this crisis. We've seen the U.S. economy do quite well with a huge amount of fiscal stimulus given directly to consumers and households. Is this maybe going to reframe some of how you guys at the IMF and again kind of broader the broader economics community thinks about how you crisis fight, how you help economies through this, and maybe reshape some of our ideas around, how to use policy in future downturns?
Well, I think an important lesson learned from the global financial crisis was, the importance of continuing fiscal support and not withdrawing it prematurely, which is what happened right after the GFC. So I think both of those lessons were learned, and thankfully, we got the right kind of stimulus that was needed as soon as the crisis hit. And it's important for countries not to prematurely withdraw that. I think that's a lesson that's been learned. Indeed, a second lesson that's been learned is that countries that are able to provide income support directly and quickly. So having a strong social safety net helps, and countries should put that in place, to prepare for the future. And so these are important measures that one has to take. And again, the recognition that we are in times when interest rates are low, historic lows, and expected to be low for quite some time, which gives fiscal authorities space to use their toolbox. And so all of this, tells you that given the nature of this crisis, fiscal is absolutely essential. And the stimulus has been quite considerable. I mean, one of the reasons one should expect to see a fairly good recovery in many parts of the world in the second half of 2021, if all goes well in terms of the virus, is the substantial support that's been provided. But I just want to point out that there's tremendous variation. Advanced economies did about 20% of their GDP in terms of fiscal support. Emerging markets, that number is 6%. And when you get to low-income countries, it's 2%. So there is that variation that unfortunately is also part of this K-shaped recovery.
Gita, given that significant stimulus you just mentioned and the fact that really cheap money from the Fed will be around for some time, and we could see that strong recovery fueled by the vaccine later this year and into 2022, in the U.S., do you think that will sow the seeds of an inflationary outbreak, and what would that look like?
So no, we don't think that's the case. Now, it is possible that once there is a strong recovery taking hold, that there might be some short-term supply issues that lead to some temporary spikes. But the question that's relevant for monetary policy is how durable this increased inflation, if any, if it comes about, will be. And there, if you look at what the impact on wage pressures, if you look at inflation expectations, both of which we know have been quite essential to the path of inflation, those remain, in many countries below target and or close to target. So the expectation is not of, durable, very high levels of inflation. And also, let's keep in mind that the shift in monetary policy in the U.S. has also been precisely to avoid a situation of too low inflation. And so I'm sure central banks would actually welcome some bit of inflation that's coming up, even maybe above their target. So to prevent the worst scenario where you actually end up with inflation being too low and being stuck at the zero low bound for very long.
And then, Gita, last question here. It seems like we kind of forgot about it amidst everything that's happened in 2020, but trade was a major story at the beginning of last year before this whole COVID pandemic really began gripping the world. What do you think the story is going to be between the United States and China, in addition to other kind of global relationships with regards to trade in 2021? Does that present headwinds or tailwinds to economic growth?
So just in terms of the facts on global trade, what we've seen is, again, in 2020, we saw rebound. It's a partial rebound, but again, that's stronger than what we had seen right after the GFC. So some of the concern that there would be a major breakdown of global supply chains, at least as of now, that's not there in the data. But in terms of services trade, of course, we're way off. Tourism and travel is still highly subdued. what happens next in terms of policies, I think this is something, of course, has been an issue. It was an issue, a major issue before the crisis. It's not going away. There's still a need to reform the WTO. There's still a need for countries to work together to address the grievances that exist in the trading system. So I suspect those frictions will still be there, but my hope is that maybe there will be, a resolution sometime in this year or next year, at least some way moving towards a resolution.